Oh my God, what a cluster F in the Palantir community. What an eventful week. Monday, the earnings hit, and everybody was just running around trying to scrape as much information as possible. Some people sold, made videos about it, put it on a Twitter that they are out. Some people were very dramatic about it. And I was talking with lots of people, right? And some of them were buying Palantir, when it was, at least as high as 20 and these kind of ranges, where obviously these people are deep into trouble, right? And they are asking, like, should I hold? Should I sell? Like, what's going on with the Palantir? Seems like the thesis is broken. Is that the case? What should I do? Well, let me outline first and foremost, my thoughts from the earnings call, which, a lot of people from the Palantir community, shareholders, were, very critical about some of the stuff, especially the sales. I have my own concerns. Obviously, we expect a lot from the Palantir. We expect a lot from Alex Karp, but there is obviously a lot of silver lining. So I would like to outline my thoughts. And in the second part, I will basically bring up my own valuation model, and I will just try to slam PLTR as much as possible, bring the barest of the bear cases as possible to basically maybe calm down some of you, right, who are a little bit under the water at the moment, and maybe encourage some of you that are having some nice cost basis. I even know some people that bought around 8 or even 7, and those people are relatively satisfied, right? So let's see where the Palantir actually might be, right, in that year 2025. As Alex Karp mentioned, he's driving the business to be 4.5 billion in revenue in 2025. So let's pull out the scenario, right? If maybe he underperforms, but that will be in the second phase. Now let me take a look a little bit into some of my notes, right? So obviously we have the product, right? Palantir is known to be, like, amazing piece of software, right? Palantir bulls and long-term investors are often mainly focused on that superiority of the software. Palantir is solving the most complex challenges our society faces: logistics, healthcare, military, you name it. And Palantir is industry agnostic, right? They really latch themselves onto anything they can find and improve the physical world, right? They are very much interested in looking into those industrials, really keeping our society up and running. And the goal of the company is to solve these complex problems wherever they arise. And he is also there to save some of the companies from possible obsolescence, right? Some of the industrials, and empower those that are on good trajectory to become even better equipped to face the uncertain world. So the point of the product still stands firmly. However, hot debate in the Palantir shareholder base is the go-to-market strategy, right? The growth over the last 2 quarters has been lower than expected. The sales team is not fully functional yet, right? Because there was a lot of talk about the sales team, but basically on the conference call, Alex Karp mentioned that they were able to do all this growth that we as a Palantir community are complaining about with just 42 salespeople. However, when you look at LinkedIn, there actually should be 142 salespeople working at Palantir. That means that a big portion, there's something going on with that big portion of them. And my assumption is that those 100 salespeople are still not fully trained, not trained well enough, don't know the Palantir product well enough to actually sell it. That's my assumption. Maybe it's wrong. Maybe there was some error with the sales team. Maybe they need to replace some of the salespeople. They were not competent enough. So here I'm a little bit treading in uncertain waters. However, let's say with that assumption that okay, maybe another 100 salespeople are slowly ramping up and ready to basically go all in Q3, Q4. That's definitely something to monitor. And yeah, the sales is crucial. But many shareholders believe Palantir is not aggressive enough with the sales as well, right? And maybe they are letting some of the customers slip through the fingers, because it is widely known that Palantir has no competition when solving the hardest problems, right? But maybe on the lower spectrum of complexity, obviously the software being very costly, there are definitely contenders in the space, right? So maybe Palantir is not as active as they could be, and maybe they are losing to competition if if the customers actually don't need Palantir necessarily. So that's the second point, that go-to-market strategy. And now let's talk about the management team, and maybe the perception about the from the Wall Street, right? Because Alex Karp is eccentric at best, erratic and arrogant at worst. No doubt he is visionary, but Wall Street obviously hates him. Palantir is almost intentionally hostile towards any critics, and institutions simply cannot afford to have such a loose cannon in the portfolio, right? And given into account that there is a class of F shares, right? There is nobody who can basically remove the carb and deal from the governance of the company, right? So due to that structure, you just cannot rid of the C-suite, and that's additional institutional investor no go, right? So there's a big portion of basically the market that's not allowed to go into Palantir, right? Which, to me, that's a double-edged sword, right? Means that, hey, like, there is this opportunity, right? There is this opportunity for alpha, right? Because if the stock price is basically artificially pushed lower because of all these negative comments, that actually means that, once the narrative flips and Palantir is no longer viewed as this kind of, like a little bit underdog or a little bit like a odd, weird child, then that's where the magic happens, right? But of course, the question is if that narrative ever flips, right? But maybe we will get a point where Palantir is so dominant that you just cannot ignore it anymore, right? The same as that happened with Tesla. Obviously in 2018, 19, there was a lot of debate, are they going bankrupt or not? But at some point, you just couldn't ignore it anymore. But let's get back to Palantir, because the next point is TAM expansion, right? Total addressable market, which Palantir continues to work on harder and harder problems and improve their software over time, right? On conference call, it was revealed that they even work with SpaceX and OpenAI. And that's very important because that means Palantir has something SpaceX needs. Otherwise, Elon Musk is known for wanting to do as much as possible in-house, right? They are trying to do as much of their own solution, and they have that case that they don't really want to work with anyone else unless they really need to. So that's definitely positive and basically reinforcement of that first point, that the software is still superior, and that part is holding strong. But then there's a question of growth, right? Which obviously, if you are having a growth company, that can make or break your investment, because it's a huge difference if you grow at 20% cap or 30%, right? Over a period of longer 3-5 years, that's such a variance in an outcome. So basically, Palantir guided for 1.9 billion as this year's revenue, and that's below expectation. And they also quietly removed the 30% target CAGR till 2025 from their presentation. Of course, if we extrapolate 3 to 5 years into the future, uh, it is uh, it will make such a difference, right? So we will look into that when I will show my valuation model. However, at the same time, even though they removed it from the presentation, Alex Karp reiterated he aims to do 4.5 billion in revenue in 2025. However, management does not share any shorter term plans with the shareholders, right? So Palantir is definitely being murky about everything. So we really need to piece all this information together. But hey, maybe that's where we as retail investors have edge. Let's see. And that brings the point of communication, because Palantir, and mainly thanks to CEO, is often very philosophical in the delivery of their plans and results. So there is definitely long-term vision in place, but no medium-term plan, or at least not one that's publicly shared with shareholders, right? So we are really left with, in this maze, and we need to piece all the information together. Stock-based compensation, another hot topic. Uh, it is trending down. If we remove stock-based compensation, Palantir would actually be profitable on accounting basis. And it's important to remember that stock-based compensation is only an accounting item, right? So, Palantir is very healthy with 260 million in annual free cash flow, right? They have 2.6 billion on balance sheet, and that's growing every month. So there is plenty to fuel any further plans, right? So, as a business, there is really no no risk of Palantir going bankrupt or anything like that, right? And anything even remotely near to that. Now let's continue with the growth, right? Commercial growth, very strong, even with sales team that just barely starting. We have 46% revenue growth, mainly in the US. Net dollar retention of 119% could be better, should be watched. Ideal existing customers should expand the scope of the software they use and pay Palantir more over time. Another important metric, but not as crucial. There are 304 customers compared to 169 just a year ago. Great news. Lower concentration of customers, less risk, and it slowly starts the domination cycle where Palantir basically gives companies edge over competitors, meaning that those competitors would need to address that, likely by adopting Palantir software themselves. And as a conclusion, I would basically say that the product is without competition on the high end of complexity. However, sales is what will make or break the growth thesis, right? And Palantir management team should really pay extra attention to this issue. And it's the difference between growing maybe 25% CAGR on the bearish side and 30% on the bullish side, or maybe more. And Q2, Q3 will be crucial to monitor how the sales team is ramping up and if new deals are being closed. So at this point, you're probably asking yourself, right? What if the management team keeps underperforming? Hey, maybe I bought in like the 18, 20 range. That's my cost basis. I don't feel so good about this investment. I'm wondering if I should sell. Well, let's take a look, right? Let's take a look at the screen. Let me share it. And basically, here we go, right? So remember, all models are wrong, some are useful. Let's kind of go through my assumption and let's take it from there, right? So basically, Palantir is guiding 1.9 billion in revenue this current year and reaching 4.5 billion in 2025. So let's give them benefit, of not reaching the target, right? Maybe let's pull the numbers so they are a little bit under it, like 4.2 billions. Maybe they underperform. Let's count with it in our bear case scenario. What's the cost of the revenue? Well, at this point, it's 380. Maybe it's going to kind of, obviously rise in line with all of the revenue. However, as obviously software business, they are probably going to be somewhere around 80% as the gross profit margin. They are a little bit more at the moment, but again, like let's keep it a little bit more compressed. Let's say it's just 80% for the sake of the argument and being bearish. Operating expenses at this year, it's probably going to be somewhere around 1.6 billion, at least, if you kind of take the numbers from the first half of the year and just multiply them. So with the net income, being basically negative. And now, obviously, let the magic happens, right? So, if we extrapolate the numbers into 2025, we get a cost of revenue of almost a billion. We get the operating expenses of 1.85, right? So maybe it's a little bit rising with the operating expenses. Let's say the Palantir continues to dilute the shareholders. That at this point we have shares outstanding of somewhere around 2.06. Maybe let's say it will grow to 2.32. And let's slap a P of 40 on it, which I would say it's quite conservative, right? As long as the company is growing 30%, you would probably expect that, for such a high growth, you would probably deserve at least a double of the PE. But again, let's say that there is still that overhang of Alex Carr being erratic, being philosophical. Institutional investors don't want to touch it. Well, either way, you cannot ignore the core numbers, right? Meaning that in 25, Palantir could do something along the lines of 64 cents of the EPS, which with obviously that amount of shares outstanding, give us the share price of $26, which if people bought somewhere, if you have a cost basis of 20, not as pleasant. You're kind of a little bit above break even. maybe basically in line with the market, probably a little bit under. But if you are buying the shares at this point, you are actually looking at 37% CAGR, right? Where normally from the market you can expect those 6, 7, maybe 8%. So like if you are buying Palantir at this point, you are getting very, very healthy margin of safety, right? And that's of course, assuming all the bearishness. If we try to go to the other way, there is that big potential upside, right? So that's how I would characterize Palantir from purely perspective of being an investment where I want to make money, right? It's a bet with very, very limited downside, very safe, big margin of safety. However, if they execute better than expected, if their software is really as good as they claim, and they are able to really spread it across all the environment, across the enterprises, there is that potential that, hey, if they will actually do the numbers, this could, be much, much bigger. But this may be a topic for another day, right? Now we've just tried to slam it as much as possible, just like really put it to the ground, boot over it, and like this is the worst that could happen. $26 per share in 25. Can we live with that? I can. Take care.